Good morning, and welcome to Our Neutral Voices Presents a Financial Pillar. I'm your host, Ryan Leopard, and today I have a couple guests joining us on the set. As always, Mildred
Good
Lopez
morning.
with Our Neutral
Good
Voices.
morning.
From Star Financial Bank, Lisa Keirns.
Good morning.
All right.
And most of you probably don't need any introduction to this gentleman. He's a local Fort Wayne legend, hailing from one of the 5 boroughs of Fort Wayne, Indiana. Waynedale's own Greg Thomas, also with Go Home Mortgage.
Thank you, sir.
Welcome. Thank you for joining us today.
Thank you
Happy
for
to
having
be here.
us.
Yeah.
Today, we're going to talk about home ownership and, most importantly, the mortgage process that gets us to that. This topic, to me, really hits home. It's one I'm passionate about because mortgages is how I started my career in the financial services industry many, many years ago. And also, we talk a lot on this show about achieving our financial freedom, right? And the key to achieving that also is through home ownership. Would you agree?
For sure.
Absolutely. So what is one of you could speak to the fact of why that's so important to reaching our financial freedom?
Go ahead, Lisa.
Lisa?
Well, you go essentially from, paying rent, that's money out of your pocket and into someone else's pocket.
Mhm.
So when you are going through the process of home ownership, you are now putting money back into your own pocket. You're building equity. So equity is basically the value of the property that you own minus whatever mortgage you have on that property. So as you make payments onto that mortgage, you're building equity, and that's
Very good.
money in your
Greg,
pocket.
anything to add to that?
Yeah, like with our tagline, go from house to home. When you own a home, it changes things. It changes your want to, your drive. It's yours.
Mhm.
And you work a little harder. You put in a few more reps. You take pride in something. You know what I mean? And that is a liberating feeling when you have a home, and you own it and you did it. You know what I mean? So it's a game changer. It's like walking out of the sandbox and walking into the boardroom in a lot of ways. You know what I mean? You feel like you've accomplished something, and it just breeds stability also.
Absolutely. And I like what you just said there about the feeling that you get, the pride that you have from being a home owner.
For sure.
And obviously it doesn't always work out this way, but building equity, when values rise, like in the environment that we're in today, when I look back at how much I've been paying on my mortgage, my home loan, and the value that I have or the equity that I have in the house now, if I went to sell it, it would be virtually like I was paying a very minimal amount of rent for these last 5, 6, 7 years I've been in the house, right?
For sure.
If I'm out there paying rent, which in most cases we would all agree, rent's usually more than what you could get a home loan for, right?
I mean,
You're renting an
In many
apartment,
cases,
a
yeah.
house. A lot of times you're paying more to that landlord than you would if you had your own mortgage or
that's definitely true from a cost per square foot standpoint.
Yep. So, not to mention you don't find yourself in the situation where you're renting, which, Millie, okay?
You rent for so long, 9 years, and then property taxes go up, and that cost has to go to somebody. And unfortunately, it's the renter. So I was asked to leave 9 years, 5 bedrooms, and kind of downsize to rent to a smaller. And that's been really hard. So let me ask you, for those who never had a mortgage and are paying rent, and they think about mortgage plus the interest is way more than what the cost of the house was. So convince me as a renter that owning property is better, because you're only owning the actual building, not the property it sits on.
No, you own the property it sits on.
So you own the property.
You own that land. That's your land.
Yes.
So you can do whatever you want with that land.
As long as you're not, there's HOA, so you have covenants and restrictions that limit what you are supposed to do, quote unquote.
And real quick, Greg, when you say HOA, homeowners associations,
Correct,
right?
thank
If you're
you.
living in an
And that's
addition or
different,
subdivision, right?
Yeah, in a neighborhood.
So
Subdivision.
there's things called planned unit developments, slang version that's a PUD, but they have covenants and restrictions where you have to, adhere to the rules, if you will, right? You can file, or go in front of the group or whoever's managing that and try to get exemptions, but you own that land. That title, that tax bill is coming in your name.
But if you are in a like a cul-de-sac or
Subdivision.
you have to abide by their rules, right? So how convince me? Because if I'm owning something, yet I still have to abide by other people's rules. How do I feel like I'm taking ownership and it's mine and I can do whatever I want? I'm thinking basic, people that if this is mine, I want to do whatever I want with it. How do we get there?
Sure, that's still there. It's called meets and bounds. Okay, so you can live in a neighborhood that is meets and bounds, which means there are no covenants and restrictions. You can do, essentially whatever you want. You want to throw up an outbuilding? Sure, you can do it. They're all over the city, but there are planned unit developments all over the city too, and it's your choice.
So when you're talking about mortgages, one of the things that I saw was shopping around, not only for the mortgage, but mortgage company,
Sure,
what they're offering.
Right.
Can you talk a little bit about that?
Real quick to start the question there, I want to start basic wise, right? Brand new,
I'm not basic.
renting.
I'm not basic.
I've been renting. I'm 22 years old. I know nothing about home ownership. Where do I start? Right? I'm interested in purchasing my first home. I know nothing about it. Where do I start?
I think a good starting point is going through the pre-approval process with your lender.
And what does that look like?
Buying a home is a very emotional experience. And so when you go into that process of making offers on a home and you're well informed and you know what you can afford, you've already gone through those steps with your lender, you're going to have a much more pleasant experience.
Okay.
But basically the pre-approval process is you are going to speak with your lender about what your goal is. Maybe you have a price range that you have in mind, or maybe that you don't want to pay more than X on a monthly basis. Your lender is going to help you understand what's included in your mortgage payment. You're not only paying principal and interest, but you are going to also likely pay taxes, your property taxes and your homeowner's insurance into escrow.
So you're paying taxes on the property because, going back to what we were just talking about, you own the land, right?
Right,
So as
exactly.
everything else in our society, we got to pay taxes on
Right.
that.
There may be loan programs that you are pursuing that have what's called PMI.
Which is
an
private mortgage insurance?
Yes, that's an insurance premium you pay when you own less than 20% equity. You own less than 20% of the property. So your
Does
down
that insurance
payment
protect me, or does that protect the lender?
it protects the lender in a case of default.
Okay.
So, but once you reach that 20% equity point, talk to your lender. Depending on what loan program you're in, that's something that may drop off from that once you reach that.
So the PMI, it protects the mortgage company and not the
right.
owner.
There's two kinds of mortgage insurance. There's mortgage insurance for disability and in type of if you run into a problem or a hardship that protects you. And then there's mortgage insurance that protects the bank.
Okay.
It's an insurance policy taken out on your ability to repay the loan. And before we maybe poo-poo on PMI, let's remember that United States is the only country in the whole world that even has a 30-year mortgage. Home ownership is much more attainable here than it is anywhere else in the world. So I think that's a good perspective to kind of latch onto when we think about, what should or should not be there.
And it allows a borrower to put less than 20% down on the property.
Right.
It gets them into that property in a much more cost-effective way.
Oh yeah, up until relatively recent, you had to put 20% down. The only way that you could avoid putting 20% down was getting a loan that ended in A, VA, FHA, USDA. So then it opens up conventional financing to where you're not getting stuck with certain fees that are tacked onto the mortgage, like upfront mortgage insurance premium or a VA funding fee or a USDA guaranteed fee. Okay. So there's a lot of good things that come from this, and these protection mechanisms, if you will, no matter who they protect, they still promote home ownership.
Yep.
So I think, just understanding those pieces as you go through the pre-approval process helps you. But then also once you've gone through that process, you understand what you can afford, then you're also going to have the upper hand as a buyer going in and making offers that have a pre-approval letter attached to them. It really shows your seller that you're a serious buyer, you know what you can afford, and then that your bank also agrees with
So,
what you
from
put
understanding, my starting point is connecting with somebody like one of you, on the mortgage side of things to start that pre-approval process, not going out finding the house and then coming for that,
Exactly.
because that will help me understand what I can afford, what price range I'm looking at, so I'm not wasting my time or anybody else's. Not to mention, when I go to make an offer on that house, dealing with realtors,
forward.
they're probably not even going to accept an offer from me if I don't already have that pre-approval in place, knowing that I'm qualified to even purchase this house if I win that. Correct?
Potentially, they may bypass your offer if it
Okay.
doesn't have the pre-approval letter attached. They may, see others that do have that, and they've known that they've, gone through that process.
Okay.
To a seller, it really shows that you're less likely to have issues down the road in securing that final mortgage once you get to the end of that process.
So what does that pre-approval process look like? Like, what do I need to bring anything to you? I mean, credit wise, what is it we're looking at in that pre-approval process?
So we're gonna talk through the application piece with you. We'll talk about gathering your personal identifying information, and then we're gonna talk about employment history. We're gonna talk about your assets, what you have saved up, and that's a big piece too. Going through the pre-approval process, understanding what does that out-of-pocket
Yeah.
cost look like, because you may go into this process thinking, okay, I've saved enough for my down payment. Well, there are also closing fees. Not only fees, but there are what we call prepaids. Prepaids are costs for your closing, but have to do more with your insurance policy. We're gonna collect that first year of homeowners insurance premium for your insurance agent, and we're gonna pay that to your agent for you at closing. And then we're gonna talk about building up your escrow account to make sure that we have enough money in that account to pay out your property taxes the next time an installment comes due. So.
Yeah, prepaid interest through the end of the month that you close in. So there's things that go into it. And we always get to the money conversation. I like to, use the analogy of a loan chair, right? Four-legged chair, right? And all four legs have to be strong to hold you up, to hold up your loan, to hold up your pre-approval, right? You're not going to sit in a leg that's got a shaky leg in it, or a chair that's got a shaky leg in it, right? So you have income, assets, credit, and collateral. We're going to assume the collateral, the home, is good because you haven't found one yet. But we're going to dive into credit. We're going to dive into those assets. We're going to make sure there aren't any large deposits within the last 60 days that we can't explain. We're going to look at your income and make sure that you're, you say you're getting 40 hours a week, but you're only getting 38. And if you've been on that job for less than a year, that's considered variable income, and that's a problem. So this is I want to add a little color to that because it's properly pre-approved and working with a local lender. Because if you have a seller and they see, an out of town or lender or somebody they don't recognize, you may lose out in a highly competitive situation.
So, do you recommend going to a lender as opposed to going to their local bank to get pre-approval? Because we talked last week so much about, like for me, for credit. When people run your credit and how that also affects your credit score. So, what is the best way to maneuver through that? Do they go to their local bank?
So the question I always have that's kind of related to what Millie was asking now is kind of like, when I start that process and I seek out a lender, or mortgage broker, or somebody that's going to help me with this home loan, what should I be looking for? Right? There's so many of us out there, or so many different lenders. What do I look for? Where do I start?
One of the questions I think a buyer should be asking their mortgage loan officer is my file going to go through underwriting? We want to really issue a solid pre-approval letter. There are lenders out there that do an initial review, but don't take that next step to really send everything through that review process. And that could potentially cause problems later on down the road, something that may have been missed up front.
For sure.
So ask that question.
So you want that? You want them to go to that
do.
step of underwriting?
You do, yeah.
And they're like, basically the underwriters are the last of defense for the lender, correct? They look at every line, make sure that I's are dotted and the T's are crossed. Am I understanding?
And they're looking for that up front, right? Before to issue that pre-approval. So we know, hey, like this is a solid deal. Income wise, credit wise, job history wise, whatever the qualifications are, the basic starting qualifications, right? Because knowing the mortgage industry like I do, there's always more, right? You
Mm.
always
But
need as much
yeah,
information.
but that's
there's
where
the basic information that pretty much everybody working a normal W-2 wage job is going to need, and you gather that stuff up front to get your pre-approval, correct?
Yeah, and you can send it to underwriting too, and when you're looking for, a lender, experience goes a long way too. Not to, blow shade on any banks, but the vast majority, I would say 99% of the loan officers at a bank are not licensed loan officers.
Mm.
They're operating underneath the bank's license. Where in
Gotcha.
my world, I have to be a licensed loan officer. I have to maintain a license. And they still do continuing education and things like that. But if they stepped into my world, they'd have to pass a test that is not easy, and you maintain that license. I do agree with Lisa in part. There are some files that do need to go to underwriting, but I think it's the loan officer's responsibility to be able to read a pay stub, do an income calculation, and know these things and look at it and size it up. And then there are files that we'll send in, but I feel, I'm in my 19th year. I feel like I can make a call on something without it going to underwriting.
Mm.
Mm-hmm. Yep. And truthfully, that's one of the reasons I reached out to the both of you with the invite to join the show, because I know both of you personally and professionally. Greg, I did my own mortgage through you, right? So I can speak from experience on the knowledge that both of you have. And then also the second most important part is how you treat your customers, right? Your response times. You don't, in the mortgage business, there's always things that come up and hurdles you have to overcome, but you don't run and hide from them, right?
Well, that's
You tackle it,
exactly
you go
right.
right after that. I think that's a very important thing to look for in somebody when you're searching. And knowing the business like I know it, a lot of times you end up with somebody on the mortgage side because of a referral.
Yes.
Right? Somebody whether it's a realtor or somebody who's done a mortgage. Like, I've referred people to Greg before just simply because I worked with him. I know his knowledge. And like I said, he did my mortgage with it as well. So thank you both once again for being on the show. But that's one of the main reasons I asked the both of you to be here.
Yeah, I want to add something there. There's two types of loan officers. Okay, there's buffalo and there's a cow. Okay,
Yeah.
Okay. Explain that a
buffalo
little bit more.
runs.
Yeah.
Buffalo will run into a storm. Thunderstorms come. That buffalo is going to run right into it and get through it as quickly as possible.
Mhm.
Cow will run away from it.
Mhm.
Okay, and we have opportunities to run into the storm or run away from it when it comes to information and basically reporting the news. We're a mortgage journalist. We report the news. We didn't do it. And if we did do it, we own it. I made a mistake. This income calculation wasn't quite right. Here's what we're going to do to fix it. So what I don't like, actually, I don't say don't like, but I benefit from people that run away from the conversation, versus being known for just keeping it real and telling people the way it is in a nice diplomatic way. But you're not running away from a conversation, which a lot of loan officers try to do. Well,
Right.
they
And-
actually succeed in doing it.
Yeah.
And sometimes it's about, having that conversation, but then the next step is what's the game plan from
Right.
here? Just because today might not be the right time, we're going to figure out
What are the
a
steps?
path.
Mhm.
And so I think that's an important piece.
It is important, because we tell folks we deal in yeses and not yets. We don't deal out
Right.
no's.
Okay.
We're with you. Like, here's what you need to do. We're going to bounce the ball back to you, but you got to shoot it. We're going to show you here's a play. You got to run it. We can't do it for you.
So something I always relate that to with my experience is also when you think about underwriters and then would you call yourself sales representatives or what?
Loan officers.
Loan
Loan
officer,
officers,
yeah.
right? You're working on behalf of your customer. The underwriters are kind of working on behalf of the lender or bank. Their job is to protect the bank's interest and make sure this is the most solid loan they can get, right? Your job is getting the deal closed for your customer. So in between there, you're kind of the individual battling with the underwriters to get this done. So underwriters are asking you for things. You're going back to the customer saying, well, now I need this. And it can be a frustrating experience a lot of times for the clients. But having somebody like yourselves that isn't running, isn't hiding from that, but being honest and upfront with that makes that process a lot smoother and easier.
And to Greg's point, someone who's experienced and knows what to ask for up front. So
Sure.
it isn't this back and forth thing. So,
Sure.
you
Yeah, because I would
really
be the
cover
one that say, "Why didn't you ask before?"
Of
You know,
course.
why
Why is this
did-
coming up now?
Exactly.
Right.
So one of the things that I really love that you keep saying is have a conversation.
Mhm.
Have a conversation. And you mentioned before the show that this is such a automated, electronic, and I'm a customer service person. So I want to talk to somebody. I want to
Sure.
look at your eyes. I want to see, are you lying to me?
Mm-hmm.
So I really like the fact that you are able to sit with people,
Sure.
because in our community right now, the lack of knowledge is
Vast.
amazing.
Yes.
It's amazing and sad at the same time. So as you speak, I'm thinking, how do I change my mindset to understand mortgage and financial freedom?
Mhm.
What is it that I have to do? Who can I sit down with? So what for you, what is it? I know Brian said find a mortgage lender or something like that. That's your start off point. But I'm shopping around, right?
Mhm.
And I have a friend who sells houses. What do I do? Where do I go first?
You got to start with, getting your documentation lined up and finding out where you're at, because I see folks getting the cart in front of the horse on a regular basis. They wait until they find a property they want to move on, and then they want to get serious about it. And then it's a crunch time. I mean, we're in a now business, so you need to be ready now. And you wait till you find something that you like, you're going to miss out, or you're setting yourself up for a fall. Okay. Like, how did this happen? Well, here's how it happened. You waited until you found a house, until you got serious. And then you kind of, there's this kind of rebel without a cause approach that a lot of buyers and borrowers, they're like, I don't need to conform to that. There's a lack of that, a lack of surrendering to the process. That's where people hurt themselves and get in their own way. They're unwilling to surrender to the process and in advance.
What about those that, I've heard FHA sometimes have first-time home buyers, and people gravitate and flock, not knowing or understanding, like one can have a balloon payment, something, and then they're homeless again, and now they can't get a loan because they then jacked up their credit because they got this free money to get a home. They thought it was free, but they didn't prepare.
Sure.
So what is it, or how do you talk to our those people that are in a situation where now they're renters again, and they don't trust the mortgage companies, they don't trust the banks, and it's like, I'm paying $500 a month of rent. What makes it good for me to get financial freedom and understand this process?
You're more protected now as a consumer than you ever have because of Dodd-Frank. The balloon payments and things like that, those are really
the predatory lending
Yeah,
stuff
predatory
we used
lending,
to have
correct.
back in the early 2000s.
right.
Yeah.
Mhm.
It was a wild, wild west before
Yeah.
2008. I mean, I started in 2005. I mean, we're doing armed loans. So you'd have a 2-year arm. So it'd be fixed for 2 years, but you have a 3-year prepayment penalty. That's predatory, right? You're saying you're telling me I have to pay you a fee
To pay on time.
to pay on time and to avoid an adjustable rate mortgage. So those things are gone, and you have lending agencies, Fannie Mae, Freddie Mac, Ginnie Mae, and they're all in the business of, solid home ownership, 30-year fixed mortgage, 15-year. Are there balloon options? Those are hard to find. Are there ARM options? Yes, there are. There's adjustable rate stuff, but it's our fiduciary responsibility to talk about those things. And like down payment assistance, for example, like right now I'm having this massive conversation with anybody that's interested in that, because Indiana Housing, great organization, right? But here's the thing. They have a 9-year clawback on their down payment money, okay? So you get 6% of your purchase price they will give you to pay your down payment and your closing costs. But if you don't live in that house for 9 years, they will claw it back. So why is that relevant right now? Because rates are artificially high right now. And everybody, when they go down, they're going to want to refi. Guess what? You want to refinance and take advantage of a low rate, you got to pay that dough back. You better be ready. So that's the conversation I'm having with everybody, and it's my fiduciary responsibility to make sure you know that. And that's a conversation we're having multiple times, because I have a conscience, and I'm not going to sit. He's like, no, you didn't tell me that. Oh, yeah, I did. I'm Ricky Repeater. I say the same thing every time to make sure people do know, yes, this will get you into this house, but you got to know this is a part of it, and it will come up because you're going to want to refi.
And real quick, because we're running short on our time here, this is a couple of things I want to talk about, but just want to clarify something when Greg was mentioning adjustable rate mortgage and predatory. It's not adjustable rate mortgages that are necessarily predatory. It was the prepayment penalty that came along with them, because there are plenty of situations out there where an adjustable rate mortgage makes a lot of sense.
Absolutely. Right now is one of them.
Absolutely. With the way the environment is. So good segue into my next question is, talk to us about the environment that we're in now, right? The rates are skyrocketing, the housing market, we're just coming off of, values going sky right through the roof here in Fort Wayne. Talk to us about today's environment.
I think one of the things I talk a lot about is, making sure that we're calculating that payment and you understand if you're going into an adjustable rate mortgage is what that worst case scenario might look like. So understanding that piece, but then we also talk a lot about, date your rate and marry your home.
Yeah, marry the house, date the rate.
Date the rate. So, I know the mortgage programs that I work with, they don't have prepayment penalties. So it gives you the opportunity to refinance. So when we see the market shift, hopefully sooner than later, back to normal levels and rates start to go down, which may be a year or two out.
10 to 12 months.
Yeah,
We'll see.
my first house, early 2000s, I was on I think 3 or 5 year arm, not anticipating being there. I ended up being there for 13 years. And in my situation, it worked out because I got in when we were in a rate environment like this and rates did nothing but go down. So keep in mind, an adjustable rate mortgage doesn't just go up. It adjusts with the rate, so it could go down. So I was in a low 3% mortgage for many, many years when rates were still in the 4s and the 5s with it. But then, we dealt with the rate environment for the last 10 plus years where rates had been so low. That's what people got used to, right? So now rates are back up. That's where they were when I bought a house early 2000s, right? Not great, but it's all what you're used to. So an adjustable rate mortgage is not necessarily a predatory or a bad thing, but that's where speaking and finding your loan officer and allowing them to advise you and walk you through the different programs is so key when purchasing your home. Correct?
Absolutely.
Yep. See, I think folks need to know about options. So we're talking about options. When you talk to a loan officer and they only tell you about one program, that's a red flag. Okay. Here's what we can do. Yes, you qualify for FHA, but this is better. Let's look at this APR. Let's look at these fees. Because FHA, if you're not making a 10% down payment, that's lifetime PMI, folks. Lifetime. So the whole 30 years you're paying PMI. So you just got to know that,
So,
and that's another thing to keep in mind. I often hear someone come to me and ask for specifically an FHA option, but it's then on us to say, hey, there are better options out there. Let's
gotta be
take
open
a look
to that.
What makes you attracted to the FHA option, and let's talk through that because we may be able to get you something with a better rate.
Or here is FHA. Well,
yes.
What about this conventional loan? It might be a better program for you.
Conventional loans have that 3% down payment option similar to the FHA. There are other loan programs out there with, no down payment requirements. So lots of options.
And kind of wrapping it up today, I just want to speak to our listeners out there is you probably have been listening to this information and have a lot of questions about, how much do I need down or how much do I qualify for, things like that. A mortgage is not a simple, easy cookie cutter product that everybody's going to get the same thing. Okay. Those are questions. And that's why you need to reach out and find somebody, a lender like Greg or like Lisa, to have those conversations with and to go through that pre-approval process first. And then once you have gone through that pre-approval process, now you're in a position to go out and start looking for a house, to start making an offer on a house, right? You've already got that information. You know what kind of loan program you're looking at. Most importantly, what that payment's going to be and what that looks like to your financial picture, right?
Oh, yeah.
So, in wrapping up today, I want to give each one of you the opportunity to maybe just talk to listeners, tell them about your company, who you work for, and how they can find you. Greg, you want to go first?
Sure. So, company is Go Home Mortgage. We're in downtown Fort Wayne. We've been in business for 22 years. Actually, our parent company has been in business for 22 years. And we have a wide variety of products that are out there that help so many people. Our lending spectrum is vast, and we love that. And that's why we're at where we're at, whether it's building a new house, having no credit and building you up from scratch, using non-traditional credit to get you into a mortgage. We want to do that. And, outside of the lending stuff that we can offer, I want to offer some just advice. If anyone thinks that we're setting ourselves up for a crash, that's false. From 2000 to 2009, we built 27.1 million homes in America. And from 2010 to 2019, we only built 5.8. That's an 81% decrease. We can only build our way out of this supply issue, and it's going to take another 7 to 10 years to do that. So if you're waiting for the bottom to fall out, you're going to be waiting a long time. And I highly recommend getting in now because home values are only going to continue to rise until the supply issue is corrected.
Mm.
Lisa?
Yeah, so I am with Star Financial Bank. So this is a special year for Star. We're celebrating 80 years in business this year. So
Wow.
I've been with Star now for 7 years, and we have branches across all across Fort Wayne. So I typically am out meeting all over town with my borrowers, and so yeah,
Yeah.
it's,
An awesome
Talking
brand new
about-
building.
Talking about, yes, downtown
Headquarters,
We're
yep.
talking about local, right? Shop local. The only locally owned headquartered bank in Fort Wayne.
Yep.
Yeah, correct. So,
That's
but
awesome.
yes, I want to thank the both of you for being here once again. For accepting my invite. Main reason reaching out to you is because I know both of you personally and professionally, and can speak specifically towards your knowledge for this topic, and also how you interact with your customers and how you treat them. Right. So, Greg, Lisa, both of you, you're tremendous in your field. Right. So,
Thank you.
Thank you.
We
thank you.
appreciate it. We definitely appreciate the information, especially for our viewers, for someone who wants to learn about financial freedom. And if you are interested in financial freedom, I know our Neutral Voices has partnered with Brightpoint for a brighter future, and we are providing financial seminars for the next several months. The next opportunity for you is August 19th. It's a Saturday, and it's at 7 p.m. They'll be talking about banking. We're talking about building your financial foundation. So if you are interested, I urge you to join, subscribe, like, and share on our Facebook page or YouTube page, but you can call 260-348-5785 to pre-register for a financial pillar building stable foundations, partnered with Brightpoint for a brighter future. So I'm really excited about that.
Yeah, absolutely, Millie. Thank you for mentioning that. And then also we have the first 4 sessions kind of planned out. After that one of the main ones I've brought up to our production team is around mortgages. So hopefully maybe one or both of you could join us for that,
Sure.
where we're actually in front of our listeners and they can
Yes.
ask those questions themselves on this process, because we need to begin to scratch the surface on this whole mortgage
Right.
thing,
Yeah.
building, refinancing, things like that. There's a lot that goes into this topic. But once again, thank you both for joining us today. Join us next week, same time, 8:30 Wednesday. Until then, I'm Ryan Leopard, our Neutral Voices. Peace.